ECB does go ahead in cutting rates as soon as September, do you think it should also take some additional measures like tiering in order to limit the damage?
I think so, and I was encouraged by the recent communication of the ECB saying that they are considering something like this, because I think that they understand that if it lasts long, yes, it can impact profitability. What does that mean then? The ability, of course, to invest, for example, in digital transformation and be more efficient. So I think the ECB cannot just look at this very far and should look at something like this. Other countries have taken similar initiatives in such situations.
So this situation has become counterproductive.
Listen, there's not just the future of banks which is at stake. Beyond it's the question of the economy, etc. What I do believe is that we have still, certainly in Europe, very accommodative financing conditions. And I feel that if there's a slowdown in the economy, it is at least more related to macroeconomic or macro-political elements, which creates uncertainty. And I'm not sure that actually a change of interest rate would deal with that. We'll see what the ECB will be doing. We'll see what the Fed is going to do going forward. On our side, we are confident that we can adapt to this environment.
So do you think the trade war is a big responsibility in this slowdown of the global economy?
Today, I think there's a mix of things. Certain things like the risk of a trade war or the Brexit, which creates uncertainty. And then you have more specific issues in certain sectors. I have in mind the automotive industry, where it's a mix of structural issues, transformations related to the climate change, perhaps a weaker market in China, etc., etc. So it's a mixed bag, which effectively means a slowdown of the economy. That's our central scenario in 2020. We remain pretty positive in 2019 for the US, for France. In China, we have a 6.2% GDP growth. We see potentially a slowdown in 2020, but not a catastrophe.